Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, over the last 5 consecutive days, it has been a very challenging two-way price action. First of all, we did see the drop back towards 73.40 but didn't get the cut, and from that the market has rejected. Now for the last 3 challenging days the market has pushed higher for the Australian dollar and now poses a threat of possibly breaking above 74.55, which would leave me neutral and also negate this rising wedge. Without a break of 74.55 and not seeing a close over New York, that is on the Saturday morning, the market could turn back to the downside. Now we get a break of 73.95 would instate the downside risk further to 73.40. Now tonight we do have the non-farm payrolls, so no doubt we will see a little bit more whippiness in the US dollar as it recently slides to a low last recorded back in March, and that was the lows of 90. Now the fact is that when we look at this pattern here, the ADX is slightly overheating. There is a little bit of divergence, and the MACD also is not fully supportive. And as I say, rising wedges are bearish, so let's see if the market does reject and fails to break above 74.55 and look back towards 73.95. When we look at the euro, the market took a stab to the upside around 121.5, which was last seen back in February, March. Now, what is interesting is the US dollar is somewhat bottoming out, and the top side on a weekly bias, I might have to go monthly actually. You can see here's where the trend began in terms of the bearishness. The pattern it isn't quite exact, as you can see here on a weekly bias. We do need to see a little bit more of this price action reversing, but not seeing it due to the candles, especially with this close to a Marubozu candle, and also the last two have been somewhat bullish, but we're seeing a little bit of hesitancy towards the top side of the range as we are overbought and the ADX is overheating above the 40 axis. Let's see if the non-farm payrolls tonight can actually shift the US dollar slightly to a bullish stance and eventually see the market return back towards the support level. But currently I am neutral at these current levels and wait further confirmation from the technicals. Well, after posting a bullish outside range day earlier in the week, the market has rejected the highs of 104 or close to the level of this 105 resistant line, and as you can see here that we've dropped quite significantly overnight, taking out the support level of 103.95, which has reinstated the downside with the attention back on the lows of around 102.80.90. Sterling still waiting for an update on the Brexit saga. Nevertheless, the market has been whipsawing all through the week. I don't have a view at these levels, but there is a bit of divergence, and also like the euro, as you can see here, sorry, the Australian dollar, should I say, you can see the MACD is lower, and looking at the sterling, it also looks the same pattern. So between the two, you can see that there is a bit of a question on these highs of the Aussie dollar and as well as the sterling. Although I don't really have a strong view at these levels, I do feel there is a reversal coming very soon. Sterling yen pushing back to the top side of the range after a rejection again at 140.30.35. Let's see if the bears can take the market back towards the support level, closely around the 139 figure 30 area. Gold is pushing higher since the rejection of 1,765, and it has got a little bit more leg room to get to around 1845 to around about 55. And let's see if the market does reject that breakdown area that we saw earlier a couple of weeks or so ago. If so, the rejection from 1865 or 55, somewhere around that region, pretty hard to sort of pick when you've got a couple of spikes in there, but nevertheless, it is close or around that 55-65 area. You could see it back down to the bottom of the range around 1,800 figure 10. Well, we can see that oil is still pushing higher after OPEC is actually looking to cut supply a little bit further in January. Now the market is overbought, the ADX is overheating, but the MACD is a little bit mixed. Let's see if the market can break above this level. If so, then we are looking up to about $50 a barrel as a potential target. Well, that wraps it for today. Thank you very much for joining me. Do remember, we do have the non-farm payrolls tonight, so keep an eye on that, especially when it comes to the US dollar and pairs that are linked to it, especially with the euro weighted at 57.6 to the index. So for now, Enjoy the weekend that's about to commence.